Hello everyone. Today we're going to discuss HNDA fourth year Strategic Financial Management subject 2017 past paper question. Under 2017 past paper question, we will discuss question number 3, leverage and risk analysis lesson related question. Question number 3 is 3-part A, B and C. First, we will discuss A part. They ask, what is financial risk? How does it differ from business risk? This is the definition of financial risk. Financial risk means any various type of risk associated with financing, including financial transactions that include company loans in risk of default. Often it is understood to include only downside risk, meaning the potential for financial loss and uncertainty about its extent. A total equity finance firm will have no financial risk, but when debt is used, the firm at a financial risk. Next, they ask the same question, how does it differ from business risk? This is the definition of business risk. Business risk or operating risk can be defined as the variability of earning before interest and tax on account of variability of sales and expenses. The variability of expenses may include variability in price of vector of production, technological changes, etc. This is the difference between financial risk and business risk. Next, we will discuss the B part. They ask that the data relating to two companies are given below. They are given company X and company Y data. Equity capital, 14% debentures, 10% preference shares, selling price per unit, fixed cost per annum, variable cost per unit, and output per annum. They ask, you are required to calculate the operating leverage, financing leverage, and combined leverage for these two companies. Assume the tax rate is 40%. Let's see how to calculate the operating leverage, financing leverage, and combined leverage. You can see, first we will calculate the operating leverage. This is the formula to calculate the operating leverage. Operating leverage equal to contribution divided into earning before interest and tax. We know how to calculate the contribution. Sales contribution equal to sales minus variable cost. In this question, they given sales price per unit and variable cost per unit. Then we can calculate the contribution per unit. Let's see how to calculate the contribution per unit. This question they given sales price company X 80 rupees, company Y 60 rupees. Already at that amount, selling price per unit 80 rupees and 60 rupees. Then less the variable cost per unit already given there. In this question they given 20 rupees, 16 rupees. So 80 rupees less than 20. So company X contribution is 60. Likewise, company Y contribution per unit is 44. Then contribution per unit multiply into output per annum. Then we can calculate the total contribution. In this question, they given the output per annum. Company X 80,000. Likewise, company Y 30,000. Then contribution per unit multiply into output per annum. Let's see how to calculate the total contribution. Equal contribution per unit multiply into output per annum. So company X total contribution is 4.8 million. Likewise, company Y total contribution is 1.32 million. Then less the fixed cost per annum. Then we can calculate the earning before interest and tax. In this question, they given the fixed cost per annum. Company X fixed cost is the 1 million. Likewise, company Y fixed cost is 600,000. So less the total contribution less fixed cost per annum. So company X earning before interest and tax is 3.8 million. Likewise, company Y earning before interest and tax is 720,000. So contribution and earning before interest and tax are calculated. Then apply this formula to calculate the operating leverage. Let's see how to calculate the operating leverage. Company X equal contribution 4.8 million divided into earning before interest and tax. So company X operating leverage is 1.26. Likewise, company Y operating leverage is 1.83. Next, we will discuss how to calculate the financing leverage. This is the formula to calculate the financing leverage. Financing leverage equal to earning before interest and tax divided into profit before tax minus open the bracket the given preferred dividend. This formula we want PD divided into 1 minus T close the bracket. Earning before interest and tax are we already calculated. Then we want to calculate profit before tax and preferred dividend. The given preference as detail, we want to calculate the preferred dividend. Let's see. Earning before interest and tax are calculated. Then less the interest cost. Finally, we can calculate the profit before tax. So first, we want to calculate the interest. Let's see how to calculate the interest amount. In this question, they given the 14% debentures, company X 500,000, company Y 400,000. This is the debt capital. So we can calculate the interest for this debt capital 500,000 and 400,000. So we already had 500,000 and 400,000. So we want to calculate the interest. Let's see how to calculate the interest. Equal 500,000 multiplied into 14%. So company X interest is 70,000. Likewise, company Y interest is 56,000. Then less the interest cost equal 70,000 and company Y interest is 56,000. So finally, we can calculate the profit before tax. So profit before tax, company X profit before tax is 3.73 million. Likewise, company Y profit before tax is 664,000. So profit before tax are we calculated. Then we want to calculate the preferred dividend. In this question, they given the preference shares data. 10% preference shares, company X 300,000, company Y no preference shares. So we can calculate the preferred dividend for company X. Let's see how to calculate the company X preference shares. I already had the 300,000. Then we can calculate the company X preferred dividend. Let's see how to calculate the preferred dividend. Equal 300,000 multiple into 10%. So company X preferred dividend is 30,000. Then we all are calculated. Then applied this formula to calculate the financial leverage. Let's see how to calculate the company X financial leverage. Equal earning before interest and tax divided into open the bracket profit before tax minus again open the bracket preferred dividend already calculated 30,000 divided into again open the bracket 1 minus T mean tax is 40%, so 0.4, close the all brackets, then enter. So company X financial leverage is 1.033. Likewise, company Y financial leverage we want to calculate. Let's see how to calculate the company Y financial leverage. Equal earning before interest and tax divided into profit before tax. Then company Y not given the preferred dividend detail. So TD divided into 1 minus T, we don't consider the when we calculate the company Y financial leverage. So company Y financial leverage is 1.084. Then we want to calculate the combined leverage. Let's see how to calculate the combined leverage. This is the formula to calculate the combined leverage. Combined leverage equal to operating leverage multiple into financial leverage. Operating leverage and financial leverage are we already calculated. Then we can easily calculate the combined leverage. Company X and company Y operating leverage is 1.26 and company Y operating leverage is 1.83. Likewise, company X financial leverage is 1.033. Likewise, company Y financial leverage is 1.084. Then multiple for two leverages. Let's see 1.26 multiple into 1.033. Then company X combined leverage is 1.304. Likewise, company Y combined leverage is 1.988. So we all leverages are calculated. Then we will discuss the C part. They ask Rajarata company currently issued 100,000 ordinary shares for rupees 20 each, 10% debentures for rupees 400,000 and 12% preference shares for rupees 200,000. The company is planning to finance rupees 500,000 in addition to existing capital. The company is considering the two alternatives. First alternative is issuing of debt 14% interest. That is the debt plan alternatives. Second one is issuing of 25,000 ordinary shares at rupees 20 each. That is equity plan. So first alternative is a debt plan Second alternative is the equity plan. They ask and also they given assume that the company pays 30% tax on the profit. They ask the two questions. First one is determine the associated earning per shares for two alternatives. Assume earning before interest and tax value of rupees 200,000 and 400,000. Second question they ask mathematically determine the indifference point. That means break even earning before interest and tax level between the debt and ordinary share plan. So they ask the first EPS calculation. Then second one is they ask indifference point calculation. First we will calculate the EPS. Let's see alternative 1 and alternative 2. I format already graphed and alternative 1 earning before interest and tax is 200,000, 400,000, and also alternative 2 earning before interest and tax is 200,000, 400,000. Then less the interest cost, then we can calculate the profit before tax. Let's see how to calculate the interest. In this question, they given company currently issued 10% debentures for 400,000. So this is the debt capital. So we can calculate the interest for this 400,000. Let's see how to calculate the interest for 400,000. I already put in the amount 400,000. Then calculate the interest equal 400,000 multiple into 0.1 10%. So 400,000 interest is 40,000. And also in the alternative one, I already told issuing of debt 40%, 14% interest is the equity capital. Sorry, debt capital. So we can calculate the interest for alternative one 500,000 also. Let's see how to calculate the 500,000 interest. 14% debt for 500,000 equal 500,000 multiple into 14%. So 500,000 interest is 70,000. So total interest amount 110,000 for alternative 1. So less than interest cost for alternative 1 110,000. Likewise, alternative 2 industries, let's see, company currently issued 10% debentures for 400,000 is the debt capital, and also alternative 2 is the equity capital. So we can't calculate the debt for this equity capital. So we considered only for 400,000 only. So we already calculated 400,000 interest is 40,000. Then less the interest for alternative 2 is 40,000. Then we can calculate the profit before tax. So alternative 1 profit before tax are 90,000 and 290,000. Likewise, company 2 alternative 2 profit before tax are 160,000 and 360,000. Then less the tax amount 13%. Let's see how to calculate the tax amount equal 90,000 multiple into 30%. So minus. So alternative 1 interest cost is 27,000 and 87,000. Likewise, alternative 2 interest cost is 48,000 and 108,000. Then we can calculate the profit after tax. So profit after tax is alternative 1 profit after tax is 63,000 and 203,000. Likewise, alternative 2 profit after tax is 112,000 and 252,000. Then we want to calculate the preferred dividend because net income for common shareholder equal to profit after tax minus preferred dividend. So first we want to calculate the preferred dividend, then we can calculate the net income for common shareholder. Let's see how to calculate the preferred dividend. In this question, they given 12% preference shares for rupees 200,000. So we can calculate the preferred dividend for these 200,000 for 12% equal 200,000 multiple into 12%. For preferred dividend is 24,000. Then less the preferred dividend 24,000. Now alternative 1 and alternative 2 preferred dividend are equal because this is the common detail. So preferred dividend is 24,000. Then less the preferred dividend. Then we can calculate the net income for common shareholder. So alternative 1 net income for common shareholder is 39,000 and 179,000. Likewise, alternative 2 common shareholder is 88,000 and 228,000. Then we want to calculate the number of common stock for alternative 1 and alternative 2. Let's see. This question, the given company currently issued 100,000 ordinary shares and also alternatives to the given. First alternative is the debt alternative. So we can't calculate the number of common stock. But second alternative company issuing the 25,000 ordinary shares. So this is the equity capital. So we consider the this 25,000 for alternative 2. So alternative 1 number of common stock is 100,000. Likewise, alternative 2 number of common stock is 100,000 plus 25,000. So alternative 1 number of common stock is 100,000 and also alternative 2 common stock is 100,000 plus 25,000. Then we all are calculated. So apply this formula to calculate the earning per shares. Earning per shares equal to net income for common shareholder divided into number of common stock. This is the formula to calculate the EPS. Let's see how to calculate the EPS. Equal net income for common shareholder divided into number of common stock. So alternative 1 EPS is 0.39 and 1.79. Likewise, Alternative 2 EPS is 0.7 and 1.82. So EPS first question we calculated. Then we want to calculate the second one. Secondly, they ask the indifference point. Mathematically determine the indifference point. That means break-even earning before interest and tax level between the debt and ordinary share plan. Indifference point means earning before interest and tax at which the earning per shares in same for the two or more alternative financial plan. This is the definition of indifference point. Let's see how to calculate the indifference point. This is the formula to calculate the indifference point. X minus I1. I1 means interest for alternative 1. And again open the bracket. 1 minus T. T means tax minus preferred dividend divided into S1. S1 means number of equity shares outstanding under alternative 1. Likewise, alternative 2 x minus interest 2. Interest 2 is the alternative 2 interest. And likewise, 1 minus t is the t mean tax all know. We all are not tax minus preferred dividend divided into S2. S2 mean number of equity shares outstanding under alternative 2. Then apply this formula to calculate the indifference point. Let's see how to calculate the indifference point. I already add the amounts x minus interest 1, alternative 1 interest. I already calculated alternative 1 interest is 110,000 minus 110,000, close the bracket. Again open the bracket. 1 minus t, that's 0.3. We all know they given in this question, they given. Again close the bracket. Minus 24,000 preferred dividend divided into 100,000 number of common stock. Alternative 1 common stock is 100,000. Likewise, alternative 2 open the bracket x minus alternative 2 interest is already calculated 40,000. We are only considered the 10% debentures 440,000 only. 40,000. Close the bracket. Again open the bracket. 1 minus tax 0.3. Again close the bracket. Minus preferred dividend 24,000 divided into number of equity shares outstanding for alternative 2 is 125,000. Already calculated this amount. Already calculated for 125,000. Then solve this formula. X minus 110,000 multiplied into 1 minus 0.3 means 0.7 minus 24,000 divided into 100,000. Likewise, x minus 40,000 multiplied into 0.7 minus 24,000 divided into 125,000. Solve this formula, we can get 0.7 x minus 0.7 multiplied into 110,000 is the 77,000 minus 24,000 divided into 100,000 equal 0.7x minus 0.7 into multiplied into 40,000. So 28,000 minus 24,000 divided into 125,000. Then solve this formula. We can get this amount 0.7 7x minus 77,000, 24,000 mean 101,000 divided into 100,000. Likewise, 0.7x minus 28,000 and 24,000 is the minus 52,000 divided into 125,000. Then solve this formula too, we can get. Then we want to cross multiple. 0.7x minus 101,000 multiplied into 125,000. Likewise, 0.7x minus 52,000 multiplied into 100,000. So, solve this formula we can get 87,500x minus 70,000x equal to this amount, 74 amount. Then solve this formula, we can get 87,500 minus 70,000 equal 17,500x equal this amount. Then we can get the x mean earning before interest and tax level is 424,285.714. So break-even earning before interest and tax is 424,285.714. That means this earning before interest and tax is equal. EPS for two alternatives are equal. This earning before interest and tax amount 424,285.714. I think you all understood. Thank you very much. We will meet next video.